Hi, welcome back. You're watching Midcap Radar. For the market once again looks to be making a dash towards the high. So 84.72 now and just about 10 points away from that 84.82 mark which it scaled earlier. But let's focus on Godrej Consumer Products. Vivek Gambhir, the managing director of the company, joins in from the sidelines of the IDFC Investor Conference. Hi, Mr. Gambhir. Thanks much. We spoke with you after the Q2 results, so I'm not going to talk about that today. But, can you take us through what are the demand trends looking like? Are they going to be a lot more upbeat for Q3?
Definitely as we look at the current environment, we are seeing a slight recovery underway, and so we have seen an uptick in demand. Certainly, it is still early days, but definitely I think our belief is that the worst is over and things are trending in the right direction, and we remain very confident that the second half of this year will be much better than the first half.
All right, Mr. Gambhir, bang on then. Things are turning around. A lot of macro points, in fact, are structurally turning in your favor, particularly for FMCG companies. Benign raw material prices, low inflation, and so on. Therefore, what kind of growth rates is a company poised for going ahead?
We obviously would not like to give any specific guidance as far as earnings estimates are concerned, but I think we are very hopeful that the moderating inflation environment, reduction in commodity prices will lead to a better consumer demand environment along with a tighter effect on input prices. So net, I think we should see better growth and better margins in the second half of the year.
Okay, so let me pin you down to that. In fact, last quarter itself, we saw a strong uptick in your margins, at least on a sequential basis. So, what kind of upside can we see from here in your overall margins?
From our perspective, I think as far as the India situation is concerned, both the softening commodity environment along with reduction in import duties for palm oil derivatives should lead to better margins for the India business. At an overall level, we will have to play a close watch, particularly in terms of what happens in Indonesia, because as you know, there was a reduction in fuel subsidy, and that could have some impact as far as inflation in Indonesia is concerned. So India margins should improve. I think on Indonesia we are being a little bit cautious and watchful, but overall our hope still is that the second half of the year should deliver better margins than the first half.
All right, Mr. Gambhir, then let's hope the second half of the year is much better. But you have an aggressive growth strategy. Can you give us a sense of how much will be organic and how much will come from inorganic avenues?
I think from our perspective, 10 by 10 is a very exciting aspiration that we are committed to. In terms of organic versus inorganic, it's hard to give a precise estimate, but at least our current thinking is that 16 to 18% growth would be organic. Beyond that, whatever growth comes in would be inorganic. As you know, it's very difficult to elaborate when an acquisition happens, and we don't have any M&A targets per se, but we're relatively confident that over the next few years, as we've seen in the last few years, interesting targets will emerge that will allow us to deliver both organic and inorganic growth.
All right, Mr. Gambhir, thanks very much for joining in and speaking with us. We're going to have to thank you because we're all out of time. We need to also wrap up on Midcap Radar, but we'll be back in just a bit with your stocks. Please stay with us.